Bitcoin has had a losing January every single January since 2014. What is going on, traders? Welcome back to the Traveling Trader. What is today? Happy Thursday to you. It's January 2nd, so this is technically the first video after New Year's. Hope you guys had a great holiday season. Hope you guys had a great New Year's. Onwards and upwards, 2020 and beyond. Speaking of 2020, so what I wanted to get into today is go over why stocks could easily hit higher highs in 2020, why the stock market could continue to surge in 2020, at least the first half of 2020. I think there might be a little bit of a slowdown towards the second half. I'll get into that once I talk about stocks. And then obviously I wanted to get into what is probably on most of your minds, Bitcoin as well. We'll go over Bitcoin's short-term and long-term pricing. We just dipped below 7K. We're currently at around 6,964. I also want to go over a couple of examples of stocks that we're holding and some crypto trade alerts. The stock market has been just a gold mine for us in 2019. The portfolio overall over 50% gains in our stock market portfolio. So what better time to get into it than now? Looking at Bitcoin, if you look at Bitcoin on the 1 day, it is still in this long descending channel that it's been forming since July 2019, hitting support and resistance multiple times. And we just currently dipped below 7K. Not really a surprise there because Bitcoin is trading in this sideways range. And as we've discussed many times before, Bitcoin has a very annoying but capable habit of trading sideways, right? And when there really isn't a clear market direction, I don't like to engage in leverage trades when there isn't a clear short-term direction. In this case, Bitcoin can really go in either direction in the short term, either trying to attack this 50 MA again, which on my chart is the orange line, the 50 moving average, trying to attack that again and potentially cross it to aim for resistance, or testing support again, which is not really great news since the descending channel means lower lows as well as lower highs, meaning the support continues to get lower and lower. So currently I do have a leveraged long setup. If you want access to the trade alerts and know exactly what I'm doing, what levels I'm looking to enter, and where I'm looking to take profit, the trade alerts, that link is in the description. You also get access to the stock trade alerts, which we will go over in a second. Again, over 50% gains in our stock portfolio for 2019. Just a really amazing market. And I did also open up a new channel for options for those of you that are getting into options or are interested in options, obviously because of the massive gains that it provides, or the potential gains that it provides over what, you know, buying and selling on the spot market could give you. That options channel is also now active in the trade alert. So back to Bitcoin, you know, you could make a justification for having a leveraged long somewhere 64, 6,500 just for the short term. You could also make a case for shorting Bitcoin in the short term to around that 6,500 range. Either way, those short-term leverage plays don't really have a bearing on what your long-term sentiment is on Bitcoin, right? Because just like options, you could be using these derivatives, these leveraged longs and shorts on Bitcoin as a way to hedge against your holdings. If you hold a large amount of Bitcoin that you bought, you know, a long time ago, or whenever it is that you bought it, you could hedge in short term. You could hedge your position using short-term market moves. So one scary thing about Bitcoin in the short term is that there is mad confluence at around 5,400. So 5,400 represents the fib extension level of 1.272 on the way down, as you see here. If you go to the weekly, the 5,400 level around there also represents the 200-week moving average, this green line, which we are more than capable of testing. We've done it already, you know, back January 2019. So who's to say that it doesn't do it in January 2020? And it's also the 0.786 fib level, which is a key level. So that 5,400 represents a lot. The reason that that's bad news is it would break the current pattern that we're in, this descending channel. The descending channel more often than not breaks to the upside, right? That's part of the character of a descending channel. While it's in the descending channel, it's a bearish pattern, but the breakout from the descending channel is expected to be bullish most of the time, right? But if we break to 5,400, then we'll eventually break this channel to the downside, which is not a good sign. That'll be an extremely bearish sign. Why I don't think that that's going to happen is because we do have the golden cross here on the 50 on the weekly between the 50 and the 100, which is signified by, if I zoom in here, you'll see it's signified by the orange, which is the 50 weekly, the yellow, which is the 100 weekly on my chart. It would have to really go above and beyond in order to do that, right? So 5,400 is around here. 5,400 is around here. It would have to go above and beyond to do that. It would have to kind of ignore this golden cross here. It would have to break the descending channel pattern to the downside. I don't think that's going to happen. It is very plausible that we test the support, right, of this channel here, which is on the weeklies around 6,100, on the dailies around, 5,900, 5,800. So it is plausible that we do that, or possible, I should say. But for now, I'm eyeing 6,400. Another piece of news, another good tidbit, information on Bitcoin is if you look at the monthly chart on Bitcoin, Bitcoin has had a losing January every single January since 2014. So you have to go back to January 2014 for the last time that Bitcoin had a green January, right? Which is here, January 2014. You see Bitcoin was up 9.7% on the month. And if you look up here, this is where I'm getting these stats. But every other January for Bitcoin has been red. So January 2015, we're down 32%. January 2016, we're down 14%, 14.5%. January 2017, it's relatively unchanged. We're down 0.25%, still down nonetheless. And January 2018, obviously after the famous or now infamous bull rally, we're down 27%. So since January 2014, January has been a really bad month for Bitcoin. So I would not be surprised to see this month be a losing month. It's just by how much is the question, right? Personally, I don't think we'll close below 6,100 because that would invalidate the descending channel on the monthly, the weekly. We could wick to 5,800 again, which is around the support of the channel on the daily. But I don't think we'll close the month out below 6,100. And obviously the market is the market. It will do what it does. And if it does, then, we're looking at a very different picture leading up to the halving possibly. Bitcoin's halving is estimated to be in May 2020. And usually what we see are gradual rallies leading up to the halving. And I think that if we do break the structure here, then we're in for a world of hurt. Anyway, again, to get my long-term and short-term moves on Bitcoin, sign up to the trade alerts. Link is in the description. Looking at a couple of alts that we traded successfully. Augur, we had a nice 9% pump on Augur to round the year off. It happened like around December 30th. There still is a good opportunity on Augur. You could play the swing to the 50 MA. However, I would like to see it close above before any real rally. Waves BTC is looking really juicy here, crossing above the 200 MA and holding for the first time really since April 2019. You see this long decline here, and we're now above the 200 MA. This could be the beginning of an accumulation phase in the form of a potential rounding bottom or some long-term accumulation pattern like that. But I'm very comfortable entering these, low risk, potentially high reward trades. All right, let's take a look at the stock market and the reasons why 2020 could still yield even more gains. And the bull run since 2009, the 10-year bull run, now almost 11 years, could continue easily. There are a few factors which could easily keep the bull run going. So looking at the market, you see that we're currently up 0.8% on the Dow, almost 0.5% on the S&P, 1 full percentage point on NASDAQ. Just some really impressive continuation gains from 2019. Leading 2020. A few of our holdings, GLD, which is the gold ETF, is shooting for recent highs again that it saw back in September. We have a pretty significant holding in GLD. Tesla shooting for all-time highs once again. It hit all-time highs towards the end of December 27th. It hit 435, aiming for that again. We bought Tesla on the dip back when it dipped to around $330 back on this dip here. We re-enter Tesla, and it's just been the gift that keeps on giving. JP Morgan hitting all-time highs today after we entered after it dipped to the 200 moving average. It is now at all-time highs. The total gains on JP Morgan for us are 21% so far. And the profits are even higher for those that engaged in options trades. Obviously, options are a more advanced way of trading. Neither is right or wrong. It just depends on what you're adept at. So the reason that the market could continue higher for 2020, I was looking at this article here, and it was really interesting. And it says, here's why the great rotation from bonds to stocks could finally happen in 2020. And to summarize the article, it highlights a very important factor that was one of the breakthroughs of 2019. And it is the continued democratization of investing. So two things happened on a wide scale in 2019. One, the growth of zero fee trading. If you remember, Charles Schwab led the way when it announced zero fees on its trading. Obviously, we have platforms like Robinhood that were already leading the way. And because Charles Schwab, one of the biggest brokers in the world, followed suit, you had pressure on TD Ameritrade and the other big brokers to introduce zero fee trading into the mix. And the second thing is fractional trading. You might have seen this pop up on an email alert or on your app that fractional trading is now being offered, meaning that on an expensive stock like Amazon, $1,800, you don't have to come up with $1,800 to buy one share. Just like in crypto, those of you that trade crypto are familiar with this concept, but you could buy a fractional portion of a stock. You can split up a share into multiple fractions and buy a portion of the share as opposed to a whole share. And just today, one of the biggest fund companies on the planet, Vanguard, also joined other brokers in eliminating trading commissions on all online stock and options trades. Now, you mix that in with the fact that surveys show millennials still remain underinvested in stocks relative to other generations. Millennials continue to receive their inheritances from their boomer parents. And that mixed in with what I just talked about, the fractional trading, as well as the zero fee, zero commissions on trading, could easily lead to an inflow of volume in the stock market. And just from personal experience, you guys might already know this, but more investors usually come to the table when it's too late. So, after Tesla hits an all-time high, JP Morgan hits an all-time high, the S&P hits an all-time high, etc. That's when, the momentum investors or the FOMO investors start coming in. Even in our trading group, I'll see a lot of questions about, is it too late to jump in on Tesla? Well, Tesla is at an all-time high. In my view, yes, it's too late to jump in on Tesla. It doesn't mean Tesla won't eventually reach $500, but it's not an optimal trade is what I'm saying. If you notice all the trades that we did in 2019, it was when we saw these heavy retracements. You see all these lines that I draw on charts, back when Tesla it's crazy to imagine, but it was, just in May or June when Tesla hit below $200 again. And it was at this, focal support zone where we first bought into Tesla, and then after exiting for profits, we bought back at a retracement. So I don't like to buy at all-time highs. I like to wait for retracements and strike at that point. Obviously, if you're a long-term investor and you don't care and you just want to have a portfolio that's 10 years long, yes, I mean, you could buy, you should be dollar cost averaging into the stock market. And the idea would be to hold through all of these retracements and all these bumps. But if you're, more of an in-tune trader who makes trades on a daily basis or weekly basis, yes, you're going to want to get the best price possible and take profits when the profits represent a significant number to you. All right. And the last reason that I'll highlight for why the stock market could continue its insane run in 2020 is because of the yield curve. The yield curve in short is the difference between, we'll just say the 2-year and the 10-year treasury bonds, even though you can have yield curves between other intervals. But the one that's cited usually the most by economists is the difference between the 2-year and the 10-year. And if you look at the treasury rates in 2018, if you remember in August, the difference between the 2-year and the 10-year bonds, it was towards the end of August, I believe. Between the 2-year and the 10-year bonds, the 2-year was providing more return than the 10-year. And that's what an inverted yield curve means, is when the shorter term bond is providing more gains than or a higher percentage yield than the 10-year bond, meaning that if you put your money in a 2-year bond, you're going to get more than if you put your money in a 10-year bond. Obviously, just by logic, that seems inverted, hence the term inverted yield curve. And so that already happened, but it corrected itself. So now it is back to the levels that we expect, where you get more money, obviously, from a 10-year bond than a 2-year bond. However, if you look at history, you'll see that the yield curve is a good indicator of a recession when it happens. But it doesn't mean that when you see a yield curve, the recession automatically happens. As a matter of fact, looking at history, this article on Forbes, I'll link it in the description, but it's a really interesting article, that the yield curve happens and corrects multiple times before a recession. So you'll see here, during the last 3 recessions, the yield curve corrected itself several times before the U.S. economy slumped into recession, meaning that the yield curve has to invert and normalize a few times before we actually see a recession. So for that to happen, obviously it takes a long time for it to invert and reverse again, to invert and normalize again. So that's why for most of 2020, coupled with the other reasons that I just discussed, I think we will see further gains. Oh, one other thing, Trump's tweet about the China trade deal. He says that, we're on the verge of signing a phase 1 trade deal with China on January 15th. If that happens, it'll obviously be a catalyst to a longer stock market rally. Now, I do think the election in 2020 could provide a temporary slowdown. And depending on who the candidate is, we're not going to get into, who we favor politically, but depending on who the candidate is in 2020, I think it will have some market implications. The stock market and the markets in general obviously are favorable to Trump because he's perceived as pro-business. And I don't think they'll be extremely receptive to a candidate that they might perceive as being socialist, like Bernie Sanders or Elizabeth Warren. Again, politics aside, all we're concerned with for the purposes of this channel is how it will affect the market. Anyway, that is it for this video. Go ahead and sign up if you want access to the trade alerts. We do have 2 more spots left for one-on-one training for January 2020. So if you do want to get better at charting, if you do want to learn how to trade options, stocks, crypto, if you want to learn portfolio management, if there are certain concepts that you're not sure of, or you just want to get better at trading overall, then sign up. Link is in the description. I only accept a handful of people that I train every month just because it is such a time suck for me. You get 3 1-hour videos every month, and obviously you can enter or cancel at any time, and I have 2 open for January, so sign up because those spots fill up quick. Subscribe to the channel, hit that notification bell, leave a thumbs up if you get anything out of this video, leave a comment if you have a question, comment, agreement, disagreement. Stay safe out there, traders. Peace.